Hi there, this is Christian Dy and Mike Stewart on April 8th, 2021, Vancouver stock and real estate market update. Let's dive right into it. So, Mike, tell me some stats on the real estate side over here. Right now, on my side, I've noticed from the reports that the listings are 126% higher than the same time last month. On the same month last year. So we are significantly higher than before. What do you what do you see here?
Yeah, you know what it is the rate, sorry, the number of transactions last year in March were super low because of what was happening with COVID, and that's when things started to shut down. So that is a low baseline. But if you sort of keep reading through the report here that we've got, basically what they're saying is in March, residents bought and listed homes across our region at levels not seen before. So the surge in activity increasing upward and is increasing upward pressure on houses. So basically, the increase is huge in a percentage number, percentage wise, but overall is huge as well because the amount of stimulus that's going into the market, and also because what we're seeing is that pent up demand that occurred during COVID being released. So we're seeing basically all time highs in terms of sales for properties. It's somewhat unprecedented. It's pretty crazy.
Yeah, absolutely. Some of the stats that I showed last time is to remind people when the sales to active listings ratio is below a 12, that means prices are trending downward. When the sales to active listing prices are above 20%, that means we're trending upward. If you just take a look at some of the numbers of what we've seen, this last one should say March. Um, so in January, we had 26% for detached homes. Then in February, we had 41. And in March, that should say March, we had 52.9%. We are significantly trending upward from, basically, that's what the data is telling us. Forecast on my side, if I just am reading the numbers correctly, 2021, we're going to see prices rising. What are your thoughts?
Yeah, 100%. We're already seeing that. If you look at what's happened in various areas of the city that, I follow, if you look at the single detached houses in Vancouver East, in the last year, prices are up 13.5%. Vancouver West up 10.4%. West Vancouver up 19.2%. So big gains in single family houses. Same thing, North Vancouver up 19.4. And you're seeing even bigger gains in places like Victoria, the Okanagan, Sunshine Coast, big gains, and bigger than these numbers here. And now if you look at what's going on with sort of condos and that sort of thing, the condo prices in the core are muted, but if you get out to some of the further out suburbs, like Maple Ridge, a condo went up 12.3% over the last year, or Pitt Meadows 10.6%, or Tawasin 10.8%. So we're seeing big gains in prices, and then also places like Whistler, Squamish, places like that, big gains in prices. So it's it's a continuation of what we've been seeing, where people are starting to get away from the core. But I think you're going to see a bit of a sea change now that vaccinations are rolled out. I don't know if you guys have signed up for the vaccination, but I'm 47 years old and they're saying I can get a vaccination in May. So we're starting to get more and more people vaccinated. And I think once we see vaccines, you're going to see that these kind of price gains and price rises continue, sort of spread into the core of the city.
Yeah, something I wanted to show, and this is of course the report that you shared with the two of us. And if anybody, just a reminder, if anyone wanted the full statistical report on what's going on in the Lower Mainland over here, you can email Mike at the end, and he'd be happy to share that. But one thing I wanted to highlight over here is that the stats, the 1 month change in the stats from January to February, they were all in positive direction. If you take a look now at March, again, not only are they in positive direction, but all of the numbers are higher than they were before. So right now, what I feel is we are gaining momentum. So comments.
Yeah, no, I 100% agree. One of the people that I follow in my reading is Jerome Powell, who's the head of the Federal Reserve. And, recently we've seen a little uptick in inflation, slight uptick in inflation that's resulted in a slight uptick in interest rates. And one of the things that Christian and I have been discussing is how there's a lot of people out there who have rate holds at extremely low rates, like under 2%, that are going to be going away in sort of March, in April, May, June. Those people are going to be very motivated to get out there and go shopping and get a property before the rates go up anymore. Personally, I think rates are going to go down again, because I think we're going to see a bit of inflation ticking up over the next few months as the economy opens. But then I think once the economy opens, I don't see that inflation sort of spreading throughout the economy. I think it's going to be focused on the real estate market. I think it's going to be focused in the stock market, but I don't think we're going to go see a return to that sort of overall ambient inflation that we saw, from the late 1960s until the early 1980s, when you saw 7-8% inflation per year. So yeah, I'm optimistic that in terms of the real estate market, that you're going to see considered continued price increases, and I don't see inflation taking off. I don't see inflation, and I don't see interest rates going up significantly either. I think they may go up a bit, and then in a few months they may start to edge down a bit.
Yeah, it's interesting you talk about the inflation rate over here. I was talking to, multiple people in the mortgage industry that I'm connected with, and they said for sure their phones are ringing off the hook because rates are going up. The fixed rate is going up, and some people they're hopping on the bandwagon a little bit late. A great time to have locked in your rate was a couple months ago. But right now, yeah, if you tried to get a 5-year fix, you're going to notice that number is higher, possibly in the low twos, whereas your friends were getting somewhere in the mid ones. And if you take a look at the stats on the housing, on prices of detached homes, which was the hottest thing in the first quarter of the year over here, some of these numbers were pretty aggressive. When I'm looking at the 3 month change over here, some of these numbers, are in the double digits in certain areas, and that's a 3 month change. So and they're hot.
Yeah.
People are still bidding. Tell me, what is going on in the housing market, specifically single family detached?
It's an interesting dynamic. So before 2016, before we had the foreign buyers tax, single family houses increased in value faster than that of condos, and it was the upper end of the market that was going craziest. Then when the foreign buyers tax was brought in, what you started to see is the price of condos increased faster than the price of single family houses, and the market for sort of high end houses basically really got soft really quickly. Now what we're seeing is a return to the market of the past, in terms of there's no foreigners active in this market. So it's all local people and local money and local incomes. So where you're seeing the biggest price increases are in places where single family houses are most affordable to local people, who make in comparison to other cities in the world of a similar size and economic development, a relatively low income. So what you're seeing is single family houses under about $2 million going absolutely crazy. And it's interesting that you mentioned those 3 month numbers. If you look at single family detached across the Lower Mainland, you're looking at about 11.8%. But there's certain places like Pitt Meadows, 17.5%. That's just unprecedented in 3 months of a price increase. Or Richmond, 10.3%. Where single family houses are still affordable to people on a local income, or like Port Coquitlam, up 16.2% in the last 3 months. So yeah, what you're seeing is local people who have money saved up because they've been staying in because of the lockdowns, and because they're getting the interest rates are super low, and people are building up cash, and people are upgrading to bigger and better houses. But it's local people. The amount of foreign buyers and foreign people in this market is very, very low. We have a group of the clients who are overseas. They're all Canadian citizens, because non-Canadian citizens don't want to get hit with a 20% foreign buyers tax. But yeah, the people that are buying and the people that are moving this market are local people making money on the local economy, And that's why, markets like, basically Vancouver East, Vancouver, East Vancouver East and North Vancouver are doing, very well. Whereas markets like West Vancouver, sure, you're seeing some price increases, but it's not crazy like it is in the Fraser Valley. It's not crazy like it is in East Vancouver. It's there definitely some variety in terms of market conditions across the region.
Yeah, it's great to sort of hear that there is this price appreciation, especially if you're a seller over here. I'm just sort of wondering, tell us a little bit about what the environment's like if someone is putting an offer. Is it still an overbidding situation right now?
It really depends on what it is. Single family house, I've said this a million times, single family house in, east side of Vancouver, single family house in North Vancouver, single family house in the Fraser Valley, single family house where, it's under 1.5 million. It's going to be multiple offer situation. It's going to be crazy. Single family house over 2.5 million, or, 2.5 million on the North Shore, or 3 point, or, over 2.5 million on the east side of Vancouver, or over probably 3 on the west side. Probably not going to see crazy multiple offer situations. It really depends on what it is, and it's very price dependent. If it appeals to a local buyer and a local taste, and it's under about 2.5, expect it to be hot. If it's above that, maybe not so much.
Got it. Got it. Tell me a little bit about what's going on in the condo market. I know it was very slow to begin the year off, but has it picked up?
Yeah, condo market's really interesting. My focus is on sort of the core of the city and then the inner suburbs. So that's what I know best, but in downtown Vancouver. So maybe let's just talk about downtown Vancouver for a bit, because it is a unique market in the fact that it's different than the suburban markets, and it's been a little quieter than the suburban markets. I would say condos over about $1 million are still quite quiet, not quiet, but not that active in the core of the city and in downtown Vancouver. When you get out a little bit, they tend to get a little bit more active when further away you get from the downtown core. One bedrooms in the downtown core and the surrounding area are very hot, particularly stuff that's well priced. Surrey, same thing. Anywhere along a SkyTrain line and anywhere along some of the high density sort of nodes in the Vancouver area that are near SkyTrain have been doing very well, particularly more so for the smaller units than the bigger units, because it's a lot of investors, it's a lot of first time home buyers and that sort of thing. So the market is doing really well. My business partner in real estate, he just recently bought a house in Kelowna, and that is another place that's just absolutely on fire. But the difference between Kelowna and the core of the city is, you go somewhere like Kelowna, you're looking at like between 5 and 7% gross cap rates, which is just phenomenal, especially if you're paying 1.9% or 1.7% or 1.6% on a mortgage. So there's a lot of my focus is on the core, but if you get out of the core of the city, things actually from a rental and investment perspective get a lot better.
Yeah, no. Sounds, really, really good from an investment perspective, things that are outside of the city a little bit.
Yeah.
So I guess we have sort of talked a lot about what's happening right now. But what did you want to add to our listeners over here, what they need to know, what maybe some things that have changed this month or things that are going on that are going to happen later this year?
Yeah, the biggest thing, guys, is to get in touch with your financial planner, your mortgage broker, so you know what's going on with interest rates, because that is a very dynamic situation. You're seeing interest rate rises, across the board for many different types of mortgages, particularly fixed rate mortgages. And then also talk to your financial planner. Christian is a great financial planner. He can definitely help you with preparing and getting ready for a purchase, because you need to have your financial house in order to get, to have the best experience when you're going to buy a property. For me, my job is to help you find the property and get you the best deal. Somebody like Christian can help you sort of arrange your finances so that everything is tax efficient and you're getting ready to, retire the way you want to. And then again, talk to a mortgage broker to see what the latest is in terms of interest rates, and to get a mortgage that works best for your goals, for your, housing purchase, be it an investment property, a primary residence or whatever. There's so many different mortgages, and there's so many different people with so many different circumstances and situations. it's really good to get in touch with a good mortgage broker. And if anybody here needs some referrals, I've got some great people who can definitely help with that. But
Yeah. Yeah,
yeah,
like I guess that's absolutely. I definitely want to echo that, and I guess the one area that I do with my clients is I don't want them to get caught into this situation where they're overbidding, but they actually can't afford what they're overbidding just because they qualified for it,
yeah,
or they're basically, grabbing every single penny they can from every single resource because they're a little bit flustered because they got beat out the last three times, and now they're literally taking their inheritance money from their grandparents or their parents and saying, hey, can I get that 50 grand early just because I want to put it down? And I kind of said, let's not go crazy over here and let's take a look at what is going on. But it's because sometimes people, they get too a little bit emotional, and they also get a little bit too competitive with getting outbid. So I want to look at, is your retirement all set up? Are your kids all set up? What's going to happen if you take some time off for maternity leave? Can you still afford the home that you're thinking of getting? And the other thing that I like to help clients with is add value by giving them ideas they never even thought of. I'm dealing with a client right now, and they're holding on to a really good rate. They're really, really anxious to buy. They love the area that they live in. Unfortunately, they keep getting beat out in that area. And then I broached the idea of, why don't you just stay in the area that you're in, but buy, like you said, Mike, some real estate that's outside of your area, that's good cap rate, good cash flow, good
yep,
rental, and just stay literally where you are right now. And they never even thought of that. And they said, does that make financial sense? That's what I'm here for. I'll figure out the math. I'll figure out the
yeah,
analysis. And I said, well, if the alternative is you continuing to rent, or are you continuing to, do the situation that you're in right now, then yeah, it might be the best alternative, because sometimes when you're holding on to a down payment and a really good rate, but you're waiting on the sidelines way too long and then you've missed the boat, well, that's not good either. So,
yeah,
so absolutely, for people who aren't sure what they're doing, they want to have a financial team. Of course, Mike, you would be on that financial team. I would be on
yeah,
that financial team as well.
yeah.
So, some different predictions of real estate in Vancouver coming out for this year, on the all the way around. Mike, tell us on the housing market, on the condo market, just in general, like areas. What is your take on things of what's going to be happening here in the next year?
Yeah, the thing that I always listen to is what are the heads of the what are the heads of the central bank saying? They're all saying they're going to keep interest rates low because they want to make sure that the economy has, enough stimulus to get back to the way it should be, and get back to where we were before COVID-19. So, and that signal to me is they're going to keep interest rates low. They're going to print lots of money, and they're going to keep those long-term rates low, and that will keep interest rates. Sorry, that will keep um, demand for real estate high. You're starting to see some things coming from the Department of Finance and the Office for OSFI, which oversees mortgages. They're starting to tighten up the stress test to increase qualification to slow the market. But I think, quite frankly, they're going to be handing out speeding tickets to the Indy 500 because I personally think that this economy and this real estate market are a bit unstoppable. And because right now we've got an active, very extreme, one of the basically the most active housing market we've ever seen in British Columbia. And there's still a relatively high unemployment rate. Now, when those people go back to work, and people start going to restaurants and start traveling and doing that sort of thing, I think you're going to see a lot more demand in the economy for housing, and I think that's going to continue to put upward pressure on housing. So I think you're going to see the kind of activity we're seeing in in the Fraser Valley, or in Sunshine Coast, or in Bowen Island, or in those places. I think we're going to start seeing that kind of price appreciation, or that kind of price appreciation we're seeing in Poco and Coquitlam and those kind of things. We're going to start seeing that in the core, and we're going to start seeing that in places that are a little quieter than they are now, because there's a lot of people who aren't working, who will be working, and they need housing. So I'm very optimistic that you're going to see significant price increases across the board, at least for the next few years.
Got it. Yeah, no, I definitely agree. I definitely agree. The thing I'm seeing on my side is, I do believe in the short term there's going to be a lot of added pressure to buy, for those who have a low locked in 120-day rate of under 2%. I think these guys are, some of them are going to get really, really competitive over here because they know from a cost perspective that if they have to renew at 2.2 or 2.1 and they're holding on to a 1.6, that's a big differential, really, really big differential over here.
Huge.
Yeah, I also don't see any slowdown in the detached home market over here, especially if it's got a suite in it, because you've got all those people who are condo townhouses now jumping to get a house, but because the jump is so high, if it's got a suite in it, then it's not as bad, and suddenly they can qualify for it, and they wanted the land, or they're starting their family is growing. But unlike when we last spoke, condos were very, 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 you weren't hearing about multiple offers. You weren't hearing a lot of action going on. But now they are starting to come back. I've got a couple of clients who are now in that market looking at it. They realized that it's a good buy out there. They were on the sidelines renting, and they said, hey, condos are cheap right now. Now they're all jumping in. Well, when everybody jumps in, they start to go up in price, right?
Yeah, totally, totally. So what's going on with the stock market, Christian? What's happening there?
That's a really, really good question over here. It is, we haven't really unleashed the vaccine to everyone yet. We haven't, the cruise lines are not cruising, and the hotels are not to capacity, and the airlines are not all flying, but you wouldn't be able to tell that with what's going on in the stock market. It is open for business. People have just, there's so much theory behind why there is so much money flowing into the stock market, why they are at all-time highs, higher than pre-COVID, even though the economy has not recovered, even though you've got a massive amount of unemployment, though you have businesses that are permanently shut down, restaurants, small business owners permanently shut down. You have people whose jobs, because of whatever, is no longer waiting for them, even after COVID. Yet the stock market, you would never, ever, ever know. So markets are really high. Does that mean that they're too high? Absolutely not. There's tons of opportunity still inside the stock market. But I've always said this: I like the stock market, but I don't love it. I love real estate. So what I've always done with my clients is I've always combined the two. I've said, how can they work together? I think if someone has invested all of their money inside the stock market, I think they're missing out on the real estate side. And if somebody's stuck all their money in real estate, they're missing out with what's going on in the stock market. I think that the real estate is a great way for younger people to grow wealth because of their leveraging money against, of course, the bank. But I think the stock market is it's a hedge. It's another way. It's another asset class to grow that could potentially yield really, really good returns. But the danger is, if a lot of people started investing in the stock market last year, they think they're geniuses because everything went up. Everyone's a genius in the stock market when everything is rising. But I think now the easy money has been made. There's a quick answer. The easy money has been made. And that money was essentially from March, April, May, around then until now March, April, May of last year till now, the easy money has been made. Now it gets a little bit trickier, right? Because now you have some very, very overinflated things. Like if you caught Tesla, you're like, oh man, Tesla's going up, so I'm going to buy in. Well, it depends where you bought in at. It was at 1.200, then it went to 5, 6, 7, 8, 900, and then it pulled all the way back down to 600.
Yep.
So
Yep.
so you got to be very, very careful of some of these high flying stocks about what you're doing, or Bitcoin, or cryptocurrency. Like there was a lot of things that went really, really hot during the year. Now the easy money, in my opinion, has been made. Now this is where the professionals got to come in. Still opportunity, absolutely. And so we should have exposure there. But you want a professional. You want someone with the same vision as you. And what a lot of my clients do is they say, hey Christian, I like real estate. It's probably why they're on this webinar right now. But I do have some money on the sidelines, and I'm not sure if I'm happy leaving 100 grand or 200 grand in cash while I wait for my next real estate purchase. Shouldn't I get some of this money moving inside the markets? And the quick answer is yes. But if you don't know what you're doing and you're worried about either losing it or missing out on an opportunity, you need an advisor. That's the point. That's what an advisor is there for. So
Yeah.
there definitely is opportunities there. But almost as a little bit of a tangent, if you do have a question, by all means fire it in now, and we'll try to field your question before we end. But one thing I was going to say is this: when it comes to we touched on it briefly about all of the money being pumped into the economy, quantitative easing, which of course is just printing money. When you think of that, more and more, like just like you listen to a lot of people, I listen to a lot of people as well. With all of that money pumping in, the value of cash, the value of a dollar keeps going lower and lower and lower. You keep adding more money, you add trillions of dollars in, well, your dollar's not going to be worth it. So where do you turn to make sure that you aren't going to lose your money out to inflation? And there is really only two answers. They are the market and real estate. So I want all of my money moving. I want to keep as little cash as possible, but I want to do it in a very, very safe way. I want to buy more real estate, and I also want money in the market. Okay, we got our first question over here. I am looking to list my condo in Olympic Village. Would you recommend selling now versus 6 to 12 months from now? Excellent question, Mike. What
Yeah.
do you say?
Yeah. Thanks, Daniel. That's a really interesting question. Um, Typically, the spring does have the highest sales price in a market whereby um, where you don't have things like COVID-19 happening. I personally think that if you have a condo and you wait, you may see more price appreciation. But at the end of the day, my crystal ball is as good as yours. Another thing I would think about too is what is the circumstances with that condo? So is it a big one? Is it a small one? And then what do you want to do with the money? So that's another thing to think about. And also, what do you want to do with the money? Because if you're selling into what is a soft market to buy into a hot market, then it might make sense to wait until the market for what you have heats up and the market for what you're buying cools down. So that's another thing I would think about is look at the market dynamics of the two places you want to go if that is the plan. And then the second thing is what's going on for you personally. That is really important when it comes to this sort of decision making. Is do you have a fantastic opportunity that you could take advantage of if you sell this now or not? You know what I mean? But I think given what I'm seeing right now, Olympic Village is just going to get better going forward. But at the end of the day, who knows? You know what I mean? Nobody could predict COVID-19. Nobody could predict September 11th. So, I don't know. There's been so many black swan events that I just don't, that I just don't know. You know what I mean?
If I was to answer that same question, should I list now or wait 6 or 12 months from now? It's like buying a stock. I would say, or it's like selling your it's like any other purchase. If you're happy with the selling price, and you're happy with the conditions that it come with, and you've got a good plan of what you're going to do yourself, like whether you're going to move or you're going to cash in and reinvest, then sell. Otherwise, the problem is you're speculating. And when you
Yeah.
speculate too much, that's how you get burned, because you're trying to hit the very, very top of a market. That's like trying to hit a perfect bullseye. I would say, are you happy with the price? Like, let's say you bought that place in Olympic Village 7 years ago. Let's say you've made, $250,000. You're happy with $250,000 gain. You're happy with the conditions of what you're going to do when you sell it, then sell it. If you said,
Yeah.
you know what, I haven't made much money off of it, or I have nowhere to go after if I sell this, then hold on to it and wait till wait until the conditions are more ideal. But trying to cherry pick and time the top of a market, dangerous, dangerous. All right, here's the next.
Yeah. I've seen that. Yeah. So Eugene's got a question. Do you see downward pressure still for condos in the downtown core? No, I don't see downward pressure at all in any market. I just don't see as much upward pressure in the downtown core for properties over $1 million than I do for single family houses outside the downtown core or one bedrooms in the downtown core. It's just, there's no downward pressure. Okay. So the next one here is from Gary. Do you have info on the condo market in Victoria? Gary, thank you very much for that question. I apologize. I'm just a Vancouver guy, but I do have a colleague in Victoria who can, if you want, after we're done, shoot me a text with your number, and I can have him give you a call and he can talk to you about it. I'm not I'm a Vancouver guy. I'm not a Victoria guy, so I wouldn't do you any services by I wouldn't do you a favor by giving my opinions on it because I don't know a whole lot about it.
And there is Mike's contact information, so you can easily connect with him, and he can connect you with the person who will have that information.
And I
And
can get And Gary, I can send you the stats if you want for Victoria. We do have those, but in terms of anything, in terms of what's going on with the market dynamics, I know it's good, but I have somebody that I can introduce you to who knows it far better than I do.
Perfect. Listing single detached home in East Van right now versus the summer. What are your thoughts, Mike?
Yeah, that's actually interesting because the summer sometimes can be difficult. It really depends on what's going on. If the weather gets super hot or if it gets smoky, that can really be bad for selling a property. So, spring is good. Single family houses in East Van are kind of going crazy right now. So, it depends. If you wait, you probably see more money. But, again, there's all those black swan things that, occur that we just can't control. So it's difficult. It's difficult.
Yeah, I'd be a little bit careful there as well, because once those rates go up, I
Yeah.
think the overbidding is going to cool. And
Yeah.
right now, you might list the same price today that you would in the summer. Oh, sorry, you might list today at, let's say, 1.5. You might list at the summer at, let's say, 1.6. You might get higher than 1.6 if you sold now, just because
That's true.
people are holding on to a rate. They're very, very anxious. Now, here's another a piece of advice for you. You might list now, you might get this crazy awesome offer. You're like, oh my goodness, somebody just went nuts on this. I gotta take it. Or you might get very, very little offers or not even asking offer. And then you could say, change my mind. I'm going to do this in the summer. You're in the
Yeah.
power position. You're in a bit more of a power position. So there's a thought. Okay, let's move on to the next one.
And just actually one thing I wanted to
Yeah,
add to
let's
that
go.
is a tree in the hand is worth more than two in the tree. And for me, I don't think interest rates are going to continue to rise. But you know what? I could be wrong. I'm just a realtor. I'm not an economist. I'm not the head of the Bank of Canada or the head of the Federal Reserve. So the economy may reopen, inflation may take off, and interest rates may take off, which would dramatically slow the real estate market here. So you never know. You could end up getting less in the summer because of that. So there's so many. In terms of when to time a sale, there's so many things to think about. Best thing to think about is what are your personal needs and what are your personal goals. If you want to wait to see if you can get more money, then wait. If you don't want to wait, then don't. Because at the end of the day, it's anybody's guess about what's going to happen in the future of the real estate market.
Yeah. All right. Why don't we do this as the last one over here? Otherwise, you can connect with both Mike and I with our contact information here. Okay.
Yeah, please do.
Where can I buy a one-bedroom condo under 400 grand? Is Maple Ridge the best option? Mike, what are your thoughts?
Yeah, you know what? Again, I'm more of a core guy than a far suburb guy. But yeah, I'm pretty sure you can get a condo in Maple Ridge for under 400K. Port Coquitlam has some options. I had a client who bought two at a project called Otto, and they were like full size one bedrooms with parking for like 385,000. The Fraser Valley's got some great options. Surrey's got some good options. It really depends if you want to buy pre-sale or resale, but there's plenty of good options in terms of investment. If you're looking at it purely for investment, I would look at the Okanagan. I would, because you're going to get higher cap rates there. Potentially Nanaimo. I would look, if you're in the city and you're thinking about buying something further out for investment, look beyond there, and I can introduce you to some people who can introduce because if you go to Kelowna, you're looking at 5 to 7% cap rates. Fraser Valley maybe 5%. So, you can, by going further out for investment, you can do really well.
And
Hopefully
the part I wanted to say is, I'm not sure if Mel is asking for investment, but if it's a place that you need to live, but you need to stay close to Lower Mainland, I know I own a couple of properties in Abbotsford, Chilliwack. If that's not too far, it's kind of similar distance to Maple Ridge, but there's a lot going out in Abbotsford, Chilliwack. A lot of stuff moving out there. A lot of infrastructure going on out there in terms of a hospital, airport, universities.
jobs.
In jobs, a lot of jobs going out there as well. And so this has been fantastic. I'm glad everybody has been on with us. Again, if you're ready to connect, you could connect with myself. You want to talk about some financial planning that integrates your real estate with your investment portfolio, or maybe just your housing situation. It's hard speaking for you for an initial consultation to talk. So if you want to talk, then let's set up a phone call. With Mike, if you were looking to get some of the statistics or some of the connections, or to explore buying or selling some of your own real estate, you could connect with Mike. We've got Mike at mikestewart.ca or 604-763-3136. If you want to join us at our next session, we've already set the date over here. It will be on Thursday, May 13th at 6 p.m. So if you're in the markets, you want to keep an eye as to what is going on. Mike and I are, boots on the ground. He's got the clients that are getting outbid or the ones who are getting the properties. I've got clients who are constantly, the rates are changing, the everything is changing, their situation is changing. So any sort of news you're hearing from the newspaper or from the radio or from the TV, that's usually 3 or 4 months old, that news, right? When you hear it directly from these talks that we give, it's very current. It's like weeks old news. Yeah. But anyway, Mike, thanks again for your great insight. Thank you, everybody, for joining us. We will catch you guys next time. This is a record. This session is being recorded, and we are also sending it to the people, even though you came to the session. Why? Because we want you to forward it on to your brother. We want you to forward it on to your parents who are thinking of selling. Anyone that you think has some value from listening to this or would like to connect with us, forward on the link when we send it to you. All right. I will see you guys at the next one, and have yourselves a great sunny day.
Thank you so much.